Are you new to the world of Forex trading and feeling very overwhelmed by all the strategies out there? You are not alone. On today's video, we are going to break down some beginner-friendly Forex trading strategies that will set you on your path to success. Stick around to the end of this video because by the end of this video, you will have the knowledge to start trading with confidence. So we're just going to be diving into these strategies, which any beginner, trust me, any beginner, even if you started learning how to trade yesterday, you will be able to trade with these strategies that I want to show you guys on this particular videos, and this is out of experience. So the number one on our list is moving averages. These are one of the simplest yet most effective tools for traders just starting out in Forex trading. I'll explain what moving average are, how to use them, and even show you guys some live examples on my live account. All right, so let's just go on my computer again, and I'm going to quickly show you guys what moving average are. I'm going to show you guys how to use them, and I'm just going to quickly show you guys a live example I took on my live account. So if you can see on my computer, I currently have a trade which is up and running, and if I can go, let me just quickly go on Control T and show you guys what is happening. Let's go on Control T. If you guys can look at my terminal, just imagine making $450 using a 0.1 lot size, meaning this trade has been up and running. This was our entry, and we've made almost about 500 pips. All right, this trade has been up and running, and we've made almost about 500 pips. And how did I get into this particular trade? Let me just drop my moving average now on the screen, and I'll be able to show you how I got into this particular trade, right? So if I just go here, let's just take any moving, let's just take 1020, right? Good. So if I go into this particular, if I drop my moving averages on the screen, let's just go back here, and we can even drop back on the 1 hour time frame, because I remember I took this trade on the 1 hour time frame. Good. So this is where I got into this particular trade. Let's just go on auto scroll. I got into this particular trade somewhere here. You can see that's it very, very clear. This is where I got into the trade somewhere here, and I got into this trade immediately. You can see this market retrace came here, and as soon as I had this moving average crossover here, there was a signal for me to buy. I bought somewhere here. My stop loss was somewhere here on around 100 pips, and I was going for almost, it was a swing trade. All right, it was a swing trade. I was going for almost about 600 pips. You can see we've already gone up by almost about 600, but we went up by about 700 pips because when the market started going up, I saw on the daily time frame that we still have a lot of room to go. So I started trailing my stop, and as of now, we've already blocked in almost about 300 pips in profit. Meaning, even if the market has to go against us, we've already blocked in about $300 in profit. And you can see that's my terminal. That's my live account. Those are, if I want to use a robot, you can see those are my live robots there, and I've made almost about $450 or $850 using a 0.1 loss and using a mini lot size. Can you guys see, using a mini lot size, I can make $450 in one trade. So sometimes in trading, you don't need to use 10 lot sizes or a 1 lot size to be able to make money. Look, I'm making almost $1,000 using a 0.1 lot size. You just need to be able to have the experience to capture those heavy moves or those monster trends and capitalize on them. So this is how I got into this particular trade, and I was just using these two moving averages. One was the slow moving average, and one was the fast moving average. So this one was the 20 moving average was the red one, and the purple one was the 10 moving average. So long as the 10 one crosses over the 21 or the 23 one from below going above, that is a buy signal. And if the opposite happens when the 10-1 crosses from above going below, that is a sell signal. So a buy signal was here and a sell signal was here. So long as I've already gotten into the trade, I just keep trailing my stop until I exit that particular trade. So what are moving averages? Moving average, if you did something like statistics in school, a moving average will just take previous candles and divide. Like for example, if I come here and they start taking the average from here, they can just count 1, 2, 3, 4, 5, 6. This is a total of almost about 10 candles. They will divide by 10, have an average, and they represent it by 1. All right. So they do that. So the software is able to automatically do that to tell you the trend of the market. So with 2 moving averages, that is effective enough to be able to tell you a particular trend in the market. So if you want a full video that will teach you step by step on how to make money as a beginner using a beginner yet very effective and a very profitable forex trading strategy, then click the link above. I prepared this video and it went very viral. So click this link above so that you can be able to watch a detailed video on how you can be able to make money in forex trading as a beginner using a moving average. So the next beginner friendly strategy which you can start using at the end of this video to make money as a beginner in forex trading is a support and resistance forex trading strategy. We will dive into support and resistance level. They are like the backbone of technical analysis in forex trading. I will show you how to identify them on your chart and how to use them to make smarter decisions and trade confidently when it comes to forex trading. So again, let's jump onto our chart and let's just pick any chart. I didn't script any of this. Let's just pick any chart. Let's just go here and pick something like the 4-hour time frame, right? This is our 4-hour time frame, and here, since we are talking about the support and resistance strategy, let's remove the indicator on our screen and just show you guys using only support and resistance. Good. So I have my 4-hour time frame here, and let me show you guys how you can identify support and resistance as a pro. To identify support and resistance in the market is just simple. It's just the way it sounds. Support and resistance are just levels, or I like to call them zones. Support and resistance zones are just key areas in the market where the market has had a lot of turns. All right. So if I come here, I can be able to see the market had a turn here, had a turn here, had a turn here, had a turn here. So that will be my support, and I can be able to come down here. This will be my resistance. The market had a turn here. Remember, I'm treating it as a zone. Treat support and resistance as a zone, not just as a line. That's very, very important. So this will be my support and resistance, my support zone and my resistance zone. And how do I call this my support zone? Because my support zone, because the market was able to have a support. If you are talking about support and resistance, take this particular example and you'll be able to understand better. If I'm sitting on this chair, right, the floor is supporting me from respecting the law of gravity, meaning the floor is supporting me. So the support line, the support zone is always above. And if something just happens, and let's just say I don't want to respect the law of gravity again, and I want to fly out of this room, what is going to stop me is my ceiling. So the ceiling act as a resistance. So that resistance is going to stop me from flying out of this room, right? So the resistance is always above and the support is always below. Best scenario, if I'm sitting on a chair, what is supporting me is a floor. So the floor level is your support. The support line is always below. And if something happens and I want to fly out of this room, I'm going to have a resistance somewhere. My ceiling is going to stop me, which is my resistance. That resistance is going to stop me there. So that resistance line is above. So the resistance line is always above, or the resistance zone is always above, and the support zone is always below. So with that explanation, this is my support, this is my resistance. And just taking trading decisions, it's very, very easy. I would have just waited for the market to come to my support and I buy somewhere here, put my stop loss somewhere here on about 60 pips and go for a risk to reward of 1:2. Waited for the market to come to my support, to my resistance, and I sell somewhere here, put my stop loss on about 50 pips and go for about 150 pips. Boom. Risk to reward of about 1:2 or 1:3. I'm out of the trade. The market did the same thing, came back to my support down here. I would have bought somewhere here, put my stop loss on about 50 pips, go for 150 pips. Boom, I'm already out. Here again, the same thing happened. So I would have done the same thing here. I would have sold again somewhere here, put my stop loss on about 50 pips, go for a risk to reward of about 150 pips. Boom, would have already been out of the trade. So that is the support and resistance strategy. And if you want a detailed video showing you guys how to trade with the support and resistance, check the video above and you'll be able to watch that particular video. So the last beginner friendly strategy on our list is the trend line strategy, which any beginner can be able to start using at the end of this video. Trend lines are very effective because they tell you the direction of a currency price movement. You also, on this particular strategy, which is very beginner friendly, you learn how to draw them correctly and spot potential trend reversals. Very, very important. If you're somebody who trade with the trend line, you need to be able to spot potential trend reversals. Very, very important, so that you'll be able to easily know how to get out of a trade and easily know how long you stay in a trade. Also stick around, because I'll be able to show you guys some advanced charting tips. All right, so let's move into my computer, and I'm going to use a previous example which I just showed you guys to still show you guys an example of a trend line. Right, if I come here on this chart, this is my 4-hour time frame. Let's go to the 4-hour time frame. And on the 4-hour time frame, there are different ways in which you can use to identify a trend in the market. Let's quickly remove the moving average, since we're not talking about the moving average, right? Then we can reduce this particular size. Just looking at this, there are different ways in which you can know the trend of a particular, the trend in the market. If the market is forming lower lows, lower highs, lower lows, lower highs, that's a downtrend. And once the market starts forming higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, that is an uptrend. So here you can see the market was actually forming lower lows, lower highs, lower highs, lower low, lower highs, lower low, lower highs, lower low. And here, somewhere here, this is where this particular trend was broken. All right, because instead of the market forming another lower low, the market started forming higher lows, higher highs, higher lows, higher highs. So this became a what? An uptrend. And if you link those higher highs and higher lows, you'll be able to have something like this. As simple as that, you'll be able to have something that looks like this, something that looks like this. By just connecting the higher lows and the higher highs, you have something that just look like this. As easy as that. So with this, I don't even need any other indicator or any other tool to tell me this is an uptrend, because you can see when I connect those points, you can see the market is actually sloping upward. So this is confirming to me that this is an uptrend. And somewhere here, if I did the same thing behind, or just going behind, it would have confirmed to me that here I was on a what? I was on a downtrend somewhere here. All right, let's just go back. Let's put on auto scroll so that we don't keep jumping behind. And if we can connect this would have been our downtrend, and the trend was changed somewhere here, and now we have an uptrend. So this is a clear indication, even without using any other tool or support or resistance or whatsoever. This would have been a clear indication for us to just wait. Anytime the market comes to our lower trend line, you can still call this your support and your resistance. The same way, this will be your support and your resistance. So anytime the market comes to your lower support line, you would have buy, and anytime the market goes to your upper resistance line, you would have sold. But this is the rule when trading with trend line. This is the ultimate rule. If the trend is an uptrend, I only want you guys to take buy trades. If the trend is a bullish trend, I only want you guys to take buy trade, because don't try to swim against the river. If the river is flowing downstream, don't try to swim upstream. All right, so that's the tip when it comes to this particular strategy. So here, the only trades you would have been taking would have been buy trade. That's why if you can see, after this retracement somewhere here, I got into this trade somewhere here, my stop loss was here, and I'm already out. I'm already up with almost about 600 pips, and with a 0.1 lot size, you guys can see what I made. So you can even use the conclusion when it comes to these strategies is you can use some of these strategies as point of confluences, meaning you can use the moving average strategy in conjunction with your trend line. So the trend line will be able to confirm that the market is in an uptrend, then you still bring in a moving average to confirm when the trend has actually changed. Or you can use your support and resistance in conjunction with trend lines. You can use support and resistance in conjunction with moving averages to be able to form points of confluences. So the best tip here is for you to be able to have strong and solid signals, learn to be able to use these strategies to form points of confluences as confluences, so that you can be able to have strong signals. So I hope you guys have been able to have a grasp on the 3 most profitable beginner-friendly strategy, which if I have to go back in time, I wish somebody gave me these strategies when I just started in Forex trading. Remember, every successful trader started as a beginner. With these strategies in your toolbox, you are well on your way to becoming a confident and a profitable Forex trader. If you want me to mentor you one-on-one, check out Godlove University link on the video description. We have the AI and the 100% automated version of Paytrex Pro now. So if you want to use it, check the link on the video description to be able to use the most viral and the most profitable Forex robot. If you also want to use the same brokers I'm using or the same prop firms I'm using, check the link on the video description to be able to use my recommended brokers and prop firm. Make sure you stay profitable, stay happy. Until then, I'll see you guys on these other videos. Peace.